Look, I know what you're thinking. Another video claiming silver is about to explode. But what's happening right now is different. This isn't speculation. This isn't hype. This is a perfect storm that's been building for years and is finally reaching a breaking point. Right now, as I'm recording this, silver is trading at 95.32 per ounce. Just 1 year ago, it was sitting around $30. That's more than a 200% gain in 12 months. And here's the kicker. Citigroup is forecasting silver could hit $100 per ounce by March and potentially $110 by the second half of 2026 gold-silver. But it's not just Citi being bullish. We've got analysts throwing around numbers like $150, even $200 per ounce. Now, before you think this is just wild speculation, let me walk you through exactly why this is happening and why it might just be getting started. The first thing you need to understand is that we're not dealing with a temporary supply disruption. This is structural. Silver has been in supply deficit for 5 consecutive years in a row, from 2021 to 2025, with cumulative shortfalls totaling roughly 820 million ounces, the Oregon Group Substack. Think about that. 820 million ounces. That's nearly equivalent to a full year of global mine production just gone, pulled from above-ground stockpiles to meet demand. In 2026, analysts at Fitch's BMI see the deficit in the global silver market continuing throughout 2026, primarily on higher investment demand. Mining.com. This deficit is expected to be massive, around 200 million ounces in 2026 trading key. We're talking about demand exceeding supply by the equivalent of Mexico's entire annual production. Now here's where it gets really interesting. On January 1st, just weeks ago, China implemented something that changed the game completely. China enforced a licensing framework that effectively restricts 60 to 70% of the global silver supply to domestic use. Invest. Let me say that again. China controls somewhere between 60 and 70% of the world's refined silver, and they just told the world you can only get it if we approve you. Only large, state-approved companies are allowed to export silver, and only after obtaining special government licenses with an annual production capacity requirement of at least 80 tons FXS. What does this mean practically? Hundreds of smaller and mid-sized exporters who have been supplying global markets are now completely locked out. And get this, Elon Musk responded to news about these restrictions saying, "This is not good. Silver is needed in many industrial processes." Yahoo Finance. When Musk is worried about silver supply for his operations, you know this is serious. This isn't just China being difficult. This is strategic resource nationalism. China's policy mirrors rare earth export tactics, prioritizing domestic industrial use over exports to strengthen geopolitical leverage. Invest. They did this exact same playbook with rare earth metals years ago, and we all saw how that turned out. China is basically saying silver is too important for our own technological future to keep exporting it at current levels. And why would they do this? Because they know what's coming. The industrial demand story for silver is absolutely explosive. Let's start with solar panels. In 2014, only 11% of silver industrial demand came from photovoltaics. By 2024, that number jumped to 29%. The Silver Institute. Yahoo Finance. Solar is now eating up nearly a third of all industrial silver demand, and this isn't slowing down. The International Energy Agency forecasts solar PV capacity will expand by 3,200 to 4,400 gigawatts by 2030. The Oregon Group. Every single solar panel requires silver because nothing else conducts electricity as efficiently. Each standard residential panel uses between 15 and 20 grams of silver. And here's the thing. The new advanced solar cell technologies actually require more silver, not less. Some newer panels need up to 50% more silver than traditional ones. Then we've got electric vehicles. EVs, especially battery electric vehicles, consume on average 67 to 79% more silver than internal combustion engines. The Oregon Group. We're talking about 25 to 50 grams of silver per vehicle. And that's in the battery management systems, power electronics, charging infrastructure, electrical contacts. All of it needs silver. Global EV production is expected to more than double by 2030. Every single one of those vehicles needs significantly more silver than a gas car. And then there's AI and data centers. This is the part most people aren't talking about yet. Data centers are the backbone of artificial intelligence, cloud computing, all the digital infrastructure we're building. Silver is essential for AI servers, switches, multi-layer ceramic capacitors and high-power components, and high-frequency data transmission components, EOCANUs. As AI adoption accelerates, so does the demand for data centers, and therefore silver. Every advancement in technology, every AI model, every autonomous vehicle, every smart device, they all need silver. Now let's talk about the supply side, because this is where things get really tight. Most silver mining happens as a byproduct of gold, lead, or zinc mining, meaning supply isn't all that responsive to swings in demand marketplace. About 70 to 75% of all silver comes as a byproduct. So even if silver prices double or triple, miners can't just turn on more silver production. They're mining for copper, zinc, lead, and silver just comes along for the ride. And here's the problem. It's hard to discover silver, it's even harder to build a mine and get the necessary permits and final approval to start production marketplace. New mining projects take 8 to 12 years to develop. There are no quick fixes coming online. And the mines we do have are getting worse. Silver mine output peaked in 2016 at approximately 900 million ounces and has been falling, dropping to an estimated 835 million ounces in 2025, the Oregon Group Substack. That's a decline of 65 million ounces from the peak. Why? Because ore grades are falling at mature operations. The easy silver has already been mined. We're now mining lower quality ore that's more expensive and yields less silver per ton of rock. There have been closures across major producers in Mexico, India, Russia, Bolivia, Kazakhstan, and Peru. The Oregon Group Substack, the world's biggest silver-producing countries, are producing less, not more. Now let's talk about what's happening in the physical market, because this is where you can actually see the crisis unfolding in real time. COMEX registered inventories in the United States are down nearly 70% since 2020, dropping from 346 million ounces to just 82 million ounces FX a street. That's a collapse of 264 million ounces from the warehouses that are supposed to back up the futures market. London Bullion Market Association vaults have lost around 40% of their holdings, and Shanghai inventories have fallen to their lowest level in a decade FX a street. The physical metal is disappearing from vaults around the world. At current consumption rates, some industrial regions have barely 30 to 45 days of accessible silver reserves FX a street. We're talking about running on fumes here. And here's where it gets wild. Physical silver in Shanghai is trading above $80 per ounce FX a street, even though paper silver futures trade lower. There's a massive premium for physical delivery because people who actually need the metal are willing to pay way more than the paper price. This is a sign of desperation in the physical market. Industrial users are scrambling to lock in supply before it gets even tighter. When you see these kinds of premiums, it means the paper market is disconnected from physical reality. Another indicator that things are getting critical is what's happening with lease rates. Silver lease rates temporarily spiked to over 8% on a one-month basis after China's export restrictions kicked in gold invest. Lease rates are what it costs to borrow silver. When they spike like this, it means there's a shortage of available physical metal. People and institutions that have silver are demanding huge premiums to lend it out because they know it's scarce. Let me connect all these dots for you. We have demand from solar, EVs, electronics, and AI infrastructure growing exponentially. We have mine supply that peaked in 2016 and is declining. We have China cutting off 60 to 70% of global refined silver supply from free export. We have 5 consecutive years of supply deficits that have drained 820 million ounces from above-ground stockpiles. We have COMEX inventories down 70%. We have London vaults down 40%. We have physical premiums spiking. We have lease rates hitting 8%. This is what a supply crisis looks like. And the market is starting to wake up to this reality. In 2025, silver jumped from $28.92 to over $70, a gain of 147%, due to record industrial demand, shrinking inventories, and the 5th consecutive global supply deficit gold-silver. That's already one of the best performing assets of 2025. And analysts think 2026 could be even better. Some are even more bullish than that. Veteran technical analyst Michael Oliver has suggested a scenario of $100 to $200 for silver by early 2026, the Oregon Group Substack. And Philippe Geisels, Chief Strategy Officer at BNP Paribas Fortis, said he would not be surprised to see silver well north of $100 in the not-too-distant future, the Oregon Group Substack. Now, I want to be clear about something. These forecasts of $100, $150, even $200, they're not guaranteed. Markets can be volatile. Silver especially can swing wildly. But what we're seeing is not speculation. This is fundamental supply and demand reaching a breaking point. The forces driving this are structural. They're not going away. Solar capacity is going to keep expanding. EV production is going to keep growing. AI infrastructure is going to keep getting built. China's export restrictions aren't going away. The supply deficit isn't magically fixing itself. New mines aren't coming online next month. This is a multi-year story. One thing that makes silver unique compared to gold is what's called the gold-silver ratio. The gold-silver ratio has compressed to approximately 51-1 as of January 2026, signaling a sharp relative revaluation in silver's favor. Hoka News. Earlier in the decade, this ratio was near 100-1, meaning it took 100 ounces of silver to buy 1 ounce of gold. Now it's around 51. Historically, during precious metal bull markets, this ratio can compress much further. If it goes back to historical averages of 15-20-1 and gold stays where it is or goes higher, the math on silver gets really interesting really fast. Here's another angle most people don't consider. Silver has been designated as a critical mineral by the United States government. This isn't just some bureaucratic label. This means the government recognizes silver as essential to national security and economic interests. When governments start treating a commodity as strategic, it changes the game. It means they might stockpile it. It means they might restrict exports themselves. It means they recognize this isn't just another metal, it's essential infrastructure for the future economy. And there's one more factor that could pour fuel on this fire: investment demand. Right now, most of the action in silver is industrial. But if investors start pouring into silver the way they poured into gold, things could get absolutely wild. Silver ETPs saw holdings rise by 18% year-on-year in 2025, driven by a net inflow of approximately 187 million ounces, goldbroker.com. That's significant, but it's still relatively modest compared to what could happen if there's a real rush into silver as both an inflation hedge and a bet on the technology transition. Think about the setup here. You've got a commodity that's essential to every major technological trend of the next decade. Solar, EVs, AI, 5G, electronics, all of it needs silver. You've got supply that can't respond quickly, because most silver is a byproduct and new mines take a decade to build. You've got China locking down exports. You've got 5 years of deficits that have drained physical inventories to critical levels. You've got major banks forecasting triple-digit prices. And you've got a market that's still relatively small compared to gold, which means when money flows in, it can move the price dramatically. The question isn't really if silver goes to $100. Based on the fundamentals, that seems almost inevitable at this point. The question is, how high can it go, and how fast? Because once silver breaks through psychological barriers like $100, the momentum can become self-reinforcing. Higher prices attract more investor attention. More investor demand puts more pressure on already tight physical markets. That creates more shortages. That drives prices higher. You get a feedback loop. Now I want to address something important. Volatility. Silver is known for being volatile. It can spike up fast and it can crash down fast. The 2011 silver peak is a perfect example. Silver hit almost $50, then crashed back down into the teens over the following years. So anyone getting into silver needs to understand this isn't a smooth ride. But here's the difference between 2011 and now. In 2011, the rally was driven primarily by investment speculation and inflation fears. The industrial fundamentals weren't nearly as strong. There wasn't a structural supply deficit. China wasn't restricting exports. EVs weren't a thing. Solar was a tiny fraction of what it is now. AI infrastructure didn't exist. The fundamentals today are completely different. This isn't just a speculative bubble. This is real supply and demand economics hitting a wall. The other thing to understand is that even with significant price increases, industrial demand for silver is relatively inelastic. Yes, manufacturers will try to reduce silver content where they can. Solar panel makers have been working on this for years through what they call thrifting. But there are limits. Due to silver's unmatched electrical conductivity and the maturity of silver screen printing processes, alternative materials and metallization techniques still have to address challenges before getting competitive science direct. You can't just swap out silver for copper in a solar panel and expect the same efficiency. In many high-tech applications, silver is irreplaceable. so even at much higher prices, the demand will persist. Let's also talk about recycling. Some people say recycling will solve the supply problem, but here's the reality. Silver production has fallen about 800 million ounces behind global demand marketplace. Current recycling provides around 180 to 190 million ounces annually, mostly from industrial scrap, jewelry, and end-of-life electronics. That's helpful, but it's nowhere near enough to close the deficit. And a lot of silver that goes into solar panels won't be recoverable for decades. Those panels have 25 to 30-year lifespans. The silver going into solar today won't come back into the market until 2050, so recycling isn't the cavalry riding in to save the day. The big picture here is that silver is undergoing a fundamental shift. For decades, it was seen primarily as a precious metal, a smaller brother to gold, something you bought as an inflation hedge or a store of value. But what's happening now is that silver is being recognized as a critical industrial commodity that's essential to the energy transition and the digital economy. It's being repriced not just as a precious metal, but as a strategic material that entire industries depend on. That's a paradigm shift, and paradigm shifts can lead to massive revaluations. So what does this mean for the timeline to $100? We're currently at $95. Citi says 100 by March, potentially 110 by mid-year. That's literally days to weeks away for the $100 mark. Could there be a pullback before we get there? Absolutely. Markets don't move in straight lines. We could see profit taking. We could see a temporary easing of tightness in physical markets. We could see some short-term bearish news. But the trajectory seems clear. The fundamentals are screaming for higher prices. The supply situation is getting worse, not better. China's export restrictions aren't going away. Industrial demand is growing, not shrinking. And once silver crosses 100 and stays there, the psychological impact could bring in a wave of new investors who've been watching from the sidelines. Here's my take. The move to $100 isn't the end of this story. It's probably just the beginning, because if we hit 100 and the physical shortage continues, if China maintains restrictions, if industrial demand keeps growing, there's no reason to think 100 is some kind of ceiling. The math says we could see 120, 150, maybe higher. Previous silver bull markets have shown how explosive the moves can be. During the 2008 to 2011 period, the silver price increased 431%, the Oregon Group Substack. If we're at the start of a similar bull market, driven by even stronger fundamentals than 2011, the upside could be enormous. The key thing to watch is the physical market. Keep an eye on COMEX inventories. If they keep draining, that's confirmation the shortage is real and getting worse. Watch for any news about mines closing or production being disrupted. Watch what China does with export quotas. Watch industrial demand numbers from the solar and EV sectors. And watch the gold-silver ratio. If that keeps compressing, it means silver is outperforming gold, which is what you'd expect in a supply-constrained industrial metal. Look, I can't tell you with certainty that silver will be at $100 in days or weeks. Markets are unpredictable in the short term. But I can tell you that the fundamentals for silver right now are the strongest I've ever seen. Every major trend in technology and energy is pulling in the same direction, demanding more silver. And every aspect of supply is constrained, from mine production to refining to Chinese export policy to depleted inventories. When you have demand surging and supply unable to respond, there's only one thing that can happen to price. It has to go up. The only question is how much and how fast. $100 silver isn't some crazy moonshot prediction anymore. It's basically where the market is headed based on current trajectory. And once we're there, if the fundamentals haven't changed, there's no reason to think that's the top. This could be a multi-year bull market that takes silver to levels that seem unthinkable right now. But then again, a year ago, $95 silver seemed unthinkable, and here we are. The setup is there. The fundamentals are there. The supply crisis is there. The only question is whether you're positioned for what's coming. Because if this plays out the way the data suggests, we're about to witness one of the most dramatic commodity moves in modern history. Silver has been overlooked and undervalued for decades, while gold got all the attention. But that's changing. The market is waking up to the fact that silver isn't just a precious metal. It's the metal that powers the future, and the future is being built right now.